Hello and good day everyone. So today we will present about Takaful and protection product. The teams are involving Hayati Zamri, Ilya Maisara, Uganeshwari, and Fatin Atira. For today's highlight, we will talk about introduction of Takaful, principle of Takaful, how does Takaful work, types of Takaful product, example of Takaful product and company cover, risk and benefit of Takaful versus insurance, and target participant. Let's introduce about Takaful. What is Takaful? Takaful is a form of Islamic insurance in which members contribute funds to a pool system to protect each other from loss or damage. Takaful branded insurance is predicted on Sharia or Islamic religious law, which delineates the obligation of individuals to protect and collaborate with one another.
Let's moving on to the principle of Takaful in Malaysia, which is Takaful principles of Takaful in Malaysia with a focus of a Shariah supervision, mutual cooperations, absence of gharar, prohibitions of interest, surplus distribution, and also moral and ethical values. So the first one is Shariah supervision, which is the compliance with Islamic law, which mean all the takaful operations must adhere to Sharia principles, ensuring that they are free from any elements prohibited in Islam. Next is Sharia Advisory Council, which is a governing body that oversees and ensures all the practices and products comply with Sharia. Next is continuous monitoring, which is the regular audits and review to maintain the Sharia compliance in all aspects of the takaful business. Next point is mutual cooperation, which is ta'awun. So it's a community support, which is participants join together to provide mutual financial assistance, and collective responsibility, which is the members contribute to a common pool, sharing the risks and also supporting each other in times of need. Next point is absence of gharar, which is the uncertainty, transparency in contracts, and also certainty in operations. So transparency in contract, which is clear and also comprehensive terms to avoid any ambiguity, and also to ensuring that all aspects of the takaful agreements are transparent and also well defined, minimizing excessive uncertainty and also any speculative risk. Next point is prohibitions of riba, which is the interest. So Takaful Principal Malaysia offer interest-free operations, which is all the financial transactions and all the investments are conducted without involving any interest, and also financings, which is ethical financings, which is investments are made in Sharia compliant avenues, avoiding any interest-bearing instruments and also activities. Moving on to the next point, which is the surplus distribution, which is the profit sharing. So surplus funds, after deducting the claims and also the operational costs, are distributed among the participants or used for a charitable purpose. And policy holder benefits, which is the participants may receive a share of a surplus based on their contributions and the performance of the takaful pool. Last but not least is a moral and ethical values in Takaful Malaysia principle, which is the integrity, fairness, and also the social responsibility. So integrity and fairness is ensuring all the dealings are conducted with the honesty, fairness, uploading the highest ethical standards, and also promoting social welfare and economic justice, supporting the well-being of the community.
Next, I will talk about how does takaful work. So there is 6 steps need to be followed, which is step number 1 is agreement. So in order to make sure mutual indemnity, participant consent to contribute a specific amount of money to a share pool. So step number 2 is contribution of fund. Every participant contribute regularly to a pool according to a principle of tabarruk, or also known as a giving or donation, which this will constitute the takaful funds. Step number three is management of funds. So this fund is maintained and administered by a Takaful operator who charge to their service. The operator is responsible for paying claims and ensuring the fund's general health. Step number four is paying claim. So if there is a loss, the operator will use fund from the Takaful funds to pay the claims. And the claim is tantamount to a lesser of the participant loss or the limit of the policy itself. Next, step number five is profit and loss sharing. If the Takaful fund has a surplus after administrative charges and claims, the participant and operator will share it according to the contract. Next, the last step, which is step number six, is re-takaful, which is the general takaful operator may also operate as a re-takaful. The operator distribute it risk to other operator or re-takaful operator to minimizing their exposure.
So the risk of takaful investment is included with investment risk, operational risk, participant risk, regulatory risk, and also the market risk. So let's look into the investment risk, which is the market volatility, which is the takaful funds are invested in Sharia compliance. Market volatility, which is takaful funds are invested in Sharia compliant assets, which are subject to market fluctuations. And lower returns, which is strict Sharia compliance, can limit the investment options, potentially resulting in lower returns compared to conventional insurance. Next is operational risk, which is the management efficiency, which is inefficiency in the fund management can impact the overall performance and also the stability of the takaful fund. And compliance risk, which is the ensuring ongoing Sharia compliance, can be complex and costly, and any non-compliance can result in reputational damage. Next is participant risk, which is the contribution levels and also the adverse selections. So for the contribution levels, incorrectly estimating the required contributions levels can also lead to insufficient funds to cover claims, and individuals with the higher risk may be more likely to join, increasing the likelihood of claiming and depleting of funds. This is a regulatory risk, which is the regulatory changes, which is changes in regulations or any legal requirements, can impact the operations and sustainability of takaful businesses. And cross-border challenges, which mean operating in multiple jurisdictions with different regulatory frameworks, can pose additional challenges. Last but not least is the market risk, which is the competitions and also the awareness and the understanding. So for the competitions, it's increased the competition from conventional insurance providers can impact the market to share any profitability, and also lack of awareness and understanding of takaful principles itself among the potential participants can limit the market growth. So what is actually the benefits of takaful? So the first one is ethical and Sharia compliance, which is religious adherence, provides a Sharia compliance alternative to conventional insurance, meeting the needs of Muslim participants. Next is ethical investment, which is the ensure that all the funds are invested in ethical and socially responsible avenues. Moving on to the mutual cooperation and solidarity, which is the community support. Participants benefit from a system based on the mutual assistance, promoting any social solidarity, and also share the responsibility together, which risks are shared among all the participants, reducing the burden on any single individual. Next benefits of takaful are transparency and also the fairness, which is clear terms, operations and contracts are very transparent, minimizing ambiguity and also enhancing participant trust. And fair practices, which is profits and surpluses are distributed fairly among the participants, aligning with the principles of justice and also fairness. As distribution also the one of the benefit, which is the participant benefits, which is surplus are distributed among the participants or used for charity purpose, providing added value, and also non-profit orientation, which is the focuses on mutual benefit rather than profit maximizations of for the shareholders. Another benefits of Takaful is a social and economic welfare, which is the inclusions and financial inclusions and also community development, which is the encourage of financial inclusions by providing insurance options that are accessible to the Muslim populations, and also surplus funds and investment can be directed towards the community developments projects and also charitable activities. Last but not least, the benefits of Takaful is risk and management, which is the pooling of risk. Collective risk management helps actually in mitigating individual financial losses, and also support inadvertency, which is provides the financial assistance in times of needed and safe financial security for the participant.
Proceed with types of Takaful product. There is two types of Takaful product, which is family Takaful and also general Takaful. For family Takaful, it's provide a combination of short-term and long-term saving and protection for participant and their dependents arising from death, disability, or survival. So in the family takaful, there is a few types, including term life, whole life, universal, endowment, educational plan, and also marriage plan. For term life, if the individual whose life is insured pass away during a predetermined time frame, the policy will only pay out an agreed upon amount. Next, for the whole life, this contract provides coverage for the insured and require a fixed payment to be paid throughout their lifetime. For universal, it offers long-time financially disability while still being adaptable to the evolving requirements and ambition of the policyholder. For endowment, if it is offer endowment advantage when one enters. Alternatively, should a premature death of the insured occur, they are paid to the independent. For educational plan, it specifically addresses a child future's financial need for education. While for marriage plan, it is intended to certify the requirement of parents regarding their children's marriage.
Okay, so moving on to another type of Takaful product, which is General Takaful. So basically, General Takaful is an Islamic insurance scheme that offers protection for various non-life risks. So basically, the participants will contribute to a fund that is used to compensate members who suffer from losses. The concept revolves around mutual cooperation, shared responsibility, and also ethical investment, all in accordance with Sharia law. There are a few common categories under General Takaful, which includes Property Takaful, where it provides coverage for damage or loss to property, including residential, commercial, and also industrial properties. This can include protection against fire, theft, natural disasters, and also other risks. Another common category which include Marine Takaful, where it covers risks associated with marine transport, including loss or damage to cargo, ships, and also related liabilities. It can be divided into Marine Cargo Takaful, which covers goods in transit, and Marine Hull Takaful, where it covers the vessel itself. Another category, which is Motor Takaful, where it provides coverage for vehicles against risk such as accidents, theft, and also damage. It typically includes third-party liability coverage as well as comprehensive coverage, which also protects the insured vehicle. Lastly is Miscellaneous Takaful. This category includes a wide range of other non-life insurance covers that do not fall under property, marine, or motor takaful. For examples, it includes personal accident takaful, travel takaful, liability takaful, and more specialized covers such as for engineering risks, fidelity guarantees, and also other things. Okay, so each of these categories is designed to provide Sharia compliant protections against various risks, ensuring that participants are covered while adhering to Islamic principles.
Moving on with the example of family takaful product and company cover. Actually, there are many company that offer the takaful product out there, and this is a few example such as like Zurich Malaysia, Great Eastern Takaful, AIA Malaysia, Etika Malaysia, Takaful Malaysia, and Takaful Ikhlas. So each of the company provide their own product, and each of the product have their own specific requirement and policies. Okay, so for Zurich, there is a Takaful Pro Secure, Takaful Al Shams, Takaful Term 18. While for Great Eastern Takaful, there is like I Grade Nova, I Grade Inspirasi, I Grade Evo, and so on. So moving on with the Etikat Malaysia, there is IKOKU, iSecure Takaful, Afia Care Takaful. For Takaful Malaysia, there is Kautim Legacy, Takaful My Mabrur, Takaful My Flexi, PA. For AIA Malaysia, there is A Life Kasih Family, A Life Idaman, Family Shield. For Takaful Ikhlas, there is Ikhlas Dariku, Ikhlas Basic Term Takaful, Ikhlas Bersama. So, this is all of the example of family Takaful product and which company covered. Mm, if we go deeply on each of the Takaful product, for example, I give example for Takaful My Mabrur, which this Takaful specifically works for Haji. So there is term and condition. There's policy that mention for Haji, Takaful for Haji. When someone's going for Haji, if they want guarantee for themselves, they need to take Takaful Mabrur, for example, like that.
So moving on to the examples of general takaful products and which company that covers the product. Okay, so first we have um, Etika Takaful Berhad, where it covers products such as house owner or householder takaful, motor takaful, and also marine cargo takaful. So basically, the householder takaful it covers for residential buildings and also contents against risks like fire and theft. Next is motor takaful, where it is a comprehensive and third-party coverage for vehicles. And lastly, for marine cargo takaful, it covers for goods in transit by the sea, air, or land. Okay, so moving on to the next company, which is Syarikat Takaful Malaysia. It provides products such as Takaful My Fire, where it covers for property against fire and allied perils. Takaful My Motor, where it is a comprehensive and third-party motor takaful plans. And also Takaful My Cargo, which is a marine takaful product providing coverage for goods during transit. Okay, next company we have Zurich Takaful Malaysia Berhad, where it provides products such as Zurich Takaful Householder, where it is a takaful protection for residential contents against risks like fire, theft, and water damage. And then next from Zurich as well, we have Zurich Takaful Motor, where it is a comprehensive motor takaful plan offering vehicle protection. And lastly, for Zurich, we have Takaful Public Liability, where it provides protection for businesses against legal liabilities to third parties. And then moving on to the next company, which is Takaful Ikhlas Berhad. So first we have the Ikhlas Fire Takaful, where It provides protection against fire and allied perils for property. And then we also have Ikhlas Contractors All Risk Takaful, where it provides coverage for construction projects. And then lastly, for the company which we have made life Takaful Berhad. So first, we have made life motor Takaful, where it provides a comprehensive motor Takaful plan covering vehicles. And then we also have personal accident Takaful, where it provides protection against accidental death, disability, and also medical expenses. And we also have a midlife fire takaful, where it covers for property against fire risks. And lastly, we have a midlife travel takaful, and where it covers for travel related risks including trip cancellations, medical emergency, and also loss of luggage.
Let me share with you about the differences between takaful and also insurance. For the first difference, for takaful, based on cooperation and also sharing, while for insurance, based on commercial factors of the organization. And then second difference, for takaful, comply with Sharia and also government laws, but for insurance, only comply with government laws only. And then for third difference, exclusively to Sharia compliant investments for takaful, while for insurance, invested in any investment channel. And then for fourth difference, devoid of elements deemed as riba, which is known as interest, garar, which is known as uncertainty, and also maisir, which is known as gambling for takaful, while for insurance, potential risk associated with investing in elements involving interest, gambling, and also uncertainty. While for the fifth different, for the takaful, risk is distributed and shared among takaful participants. While for insurance, risk is assumed by the insurance provider rather than the insured individuals. For the last difference, for the takaful, profit sharing between participating members and also shareholders, while for the insurance, profits and money belong to shareholders and also the insurance company. So now let me explain about the target participant for Takaful product. So Takaful insurance and Islamic insurance concept grounded in mutual cooperation and responsibility targets a wide range of participants. The primary participant typically include, which is firstly is individuals and also families. So Takaful insurance offers health, life, and also general insurance products, which is for young professionals. They may be looking for health, life, and critical illness insurance as they start their careers and also families. And then for middle aged adults, this group often seeks comprehensive coverage for health, life, and also their retirement planning. And then for parents, insurance products tailored for child education and also future planning. And then secondly is for business. So small, medium, and also large enterprise often participate in takaful, which is small and medium enterprise. They require various insurance products for employee benefits, business continuity, and also liability coverage. But for large corporation, comprehensive insurance packages for employee benefits, property, liability, and also other risks. And then third target participant is for organization and also institution. So non-profit organization, religious institution, and also educational benefits may use takaful. And then fourth target participant is Muslim communities. So since takaful is compliant with Islamic participant, it particularly appeals to Muslim communities who prefer Sharia compliant financial products. So this is like religious group. So usually takaful products that comply the with Sharia law, which prohibit interest, which is riba, uncertainty, which is garar, and also gambling, which is maisir. And then last target participant is general market. So takaful is not limited to Muslim alone, but non-Muslim who appreciate the ethical approach and mutual benefit model of takaful may also participate. Furthermore, one of the target participant is government employee. So in some regions, government employee are offered takaful as part as their employee benefits.
That's all from us. Thank you.